Good afternoon, everybody. Welcome to the Moving Markets Podcast. It is Tuesday, November the 25th, 2025. I am starting this recording right at the close of the market. The stock market has officially been closed for barely 1 minute at the time I am beginning this recording. So good day in the stock market. Good day for everything. After a nice big rebound yesterday, we had more follow-up, especially with the Dow Jones Industrial Average today. Dow Jones finishing the day up 663 points. It was interesting. If you were watching the Dow at the beginning of the day, it took off to the upside, about 300 points up right there, dropped to over 100 points down. This was all in the first 20, 25 minutes of trading. Then it started to climb and wobble a little bit and climb and wobble a little bit. And then it just got going, leveled off for a while. And then in this last hour of trading, it just climbed. It was up over 700 points a couple of times. All in all, a very good day for the Dow Jones Industrial Average, and not a bad day by any stretch for the other indexes. It took a little while longer for the NASDAQ to get going today. The NASDAQ, looking at this one-day chart of the NASDAQ, you'll see what I mean. The NASDAQ, it kind of followed a similar pattern, except that this was down a little bit deeper. It wobbled a little bit more in the middle of the day here, and then finally got a steady climb before giving up just a tiny bit of it right before the closing bell. And then the S&P, of course, had a good day as well. So all in all, good day for the market, especially for the Dow Jones Industrial Average. And this in spite of some low consumer confidence. Some consumer confidence numbers came in lowest it's been since April, when the tariff news came out, the Liberation Day, as Donald Trump wanted to call it. Consumer confidence, when it came out this morning, you can see that the actual was 88.7. It was expected to be 93. The prior was 94. I know these numbers are super small on your screen, but 94, it got revised up a little bit. It was expected to come back down. It came back down a lot farther. 88.7, it's funny because they're talking about a low consumer confidence number, but that's not that low. 88.7 is not a horrifically low number. It's just lower than what was expected, and it is the lowest it's been for a while. So I think that ship will right itself pretty quickly. I think a lot of this was the government shutdown. I think that had a lot of people really upset, really concerned, frustrated, to say the least. And so I think the fact that that's ended now, and we won't be talking about it again, at least until the end of the year, first part of next year, is a good thing. The bigger story on today's movement has to do with the numbers that came in on PPI. Remember, we were talking about this yesterday, or I was talking about this yesterday, and I said that if these numbers were relatively in line, everything would be good. If they were a little bit high, it wouldn't be a big deal. If they were a little bit low, it could boost the market a little bit. So here's what you had. You had a situation where, see, you don't see it on your screen, but I've got something in the way on my screen. Let me move it out of the way. There we go. Okay, so you had a situation where the PPI month over month came in line. Okay, perfect number. Year over year came in a tiny bit high. Again, this was only 1/10%. So that was what I was alluding to when I was saying it wouldn't be that big a deal. It wouldn't be a huge major deal. When you take out food and energy, it's the core, it's taking out food and energy that the Fed looks at a little bit closer. And when you take those out, you actually had 0.2% lower on month over month core and 0.1% lower on year over year core. And that was the good news. It was this news right here, in conjunction with an ADP jobs report that was a lot worse than expected. I'm not seeing that. I don't know why that's not in my list on here. But the ADP jobs report came in with a negative 15,000 instead of a negative 2,500. So a contraction in jobs. And so you get the Fed seeing two things that are both good for a potential rate cut. Number one, inflation, tame. Doesn't have to be coming down. It's tame, and that's what people were looking for. And then number two, the poor jobs numbers, and as a result of that, you've got this number now staying solidly in the low 80s as far as what people believe the people believing the Fed is going to make a cut, and not very many people now believing that the Fed is going to hold rates steady. I think over the next 2 weeks, while we wait for that Fed meeting to occur, you're going to see this market continue a climb. Maybe not back to all-time highs, maybe not anything. I don't think you'll see a lot of days quite like today. You might see another day or two where the rebound is sharp. You can see today is getting the S&P 500 almost to the point of crossing back over, technically bullish on the 5 and 20-day moving average. The RSI certainly pointed in the right direction. And then the same thing with the Dow. In fact, the Dow may have been a big enough up day on the day. No, not quite, but the Dow doing the same thing. Excuse me. Dow Jones doing the same thing. Close to crossovers on both the RSI and the 5 and 20-day moving average. And I think you'll see just the exact same pattern for the NASDAQ. NASDAQ maybe even a little bit closer on the 5 and 20-day moving average because it's 3 strong days in a row. The MACD still got a little ways to go on that. So if these all cross over to the upside, you're going to see a very, very good Christmas rally. It's going to be impressive. And the Fed's going to come in line with what everyone wants and needs them to do. The trades that we have open, I do not have in here yet. I know I need to get it in here. I don't have in here yet the diamond trade. It's up a little bit today, 11-12% on the diamond trade. But as you can see, we're only down a little bit on SPY. Nvidia was the one and only company that took a hit today. I'm still confident. This is such a long-term trade. I've got all the confidence in the world this one's going to come back. Palantir and Amazon both looking markedly improved today over where they were at just a short time ago. Last week they looked ugly. The week before they looked ugly. They look good today. So our net annual return is just looking absolutely fantastic at 377% on our spread trades. I'm still working on some triple play trades. I don't want the members of the triple play program to feel like they're being forgotten. I want to see some technical crossovers take place on the indexes and on a couple of other stocks that I follow really closely before I try and do something on those. I want a little more confidence that this bullish move is going to continue. So I'm being very, very cautious on that. I'm being incredibly cautious on that. So with that said, our collar trades are looking fantastic. We are up on APLD. I think we're down a little bit on CoreWeave, but not too bad, especially with the shares that we added. They're coming up a little bit. Nvidia, why won't that refresh? I'm not sure. I think everything is still trying to refresh here. But Nvidia is looking good. We do need to make an adjustment to some puts on Nvidia. We're going to do that probably. I'm going to work on that when I finish this podcast. I'm going to send out the adjustment for the puts on Nvidia. We won't wait any longer than we have already. We might be able to add another 100 shares to our Nvidia position. Palantir looking good. Snap looking good. SoFi looking good. Uber looking good. I like where we're at with all of these collar trades. I really do. Even CoreWeave being down a little bit, a 2% drawdown there. To me, not a big deal that we've got a 2% drawdown here because we've already been able to add 200 shares over what we started. I'm excited for CoreWeave. I think they're going to go big next year. I think this is going to be a great collar trade to be in. I think we'll be rolling short calls not too long from now, and we're going to be doing it happily. So that's where we're at on everything. I know this is a pretty short podcast today, but I don't need to ramble on with a lot more. I'm going to be back tomorrow right around the time the market closes. And then remember, Thursday, the markets are closed, so there won't be anything going on Thursday. And Friday, I do not plan on doing a podcast unless I need to. And you'll know when I'll post it on Discord. I'll put it on the website if I need to. But my plan right now is that I'm not going to do that. I'm just going to take the rest of the weekend and enjoy it. I hope you'll do the same. All right, goodbye for now. I will be back tomorrow right around the close of the market. Thanks, everyone. Bye-bye.